Welcome everyone to another easy algo training. Today is Monday and we're going to be going through indicator X, but I have a very exciting announcement is Imbalance X is finally ready. It's been weeks to get this all organized and set up and so much back testing and trial and error and just perfecting it. And this is version 1 that we've completed now. There's still a few little additions we're making to it, but this is the first version of it, which we're going to bring to you guys today. And I'm very excited because I've been testing a lot, and I think it's going to be an excellent confluence for everyone to use with the strategy and with multiple different strategies, actually. Today I'm going to be showing you how to use it with the indicator X specifically, but you could use it with Trend X and whichever other strategies you're currently using, it will definitely work. I'm very excited to be going through the details of it with you today and how it all works. So first of all, what is this Imbalance X? What does it really do? So it's designed to measure momentum in the market. It's a volatility indicator. And what it does, it picks up on these movements within the candles. Whenever we get large amounts of supply entering the market or demand entering in the market, it usually leaves behind a fair value gap. And the one we've built actually has a multi-time frame functionality, which I'll go into detail, which sets it apart from anything else you'll find out there. Gives us the function to set it to any time frame we want, and then we can have it set to a higher time frame bias, and we can be on a lower time frame and still be seeing that higher time frame. But I'll go into more details about that now. So how do imbalances work? How does this actually work? What is the purpose? And the key that we're going to focus on today, it helps us identify momentum shifts in the market. You know, if you don't know, if you know much about fair value gaps, basically when you get a gap or a separation between three candles, and that separation shows you a position on the chart where there's been a burst of incoming either supply or a burst of incoming demand in the markets, and almost a higher or an abnormal amount than most of the chart. So what this indicator doing is it's going to pick up on these bursts of volatility, these momentum, and it's going to mark them out on the chart for you. It's going to help you in terms of setting targets. So fair value gaps can be fantastic target zones where we can potentially look to exit trades. And it also lets us know when round trips are beginning and round trips are ending, which I'll also go into a lot of detail about round trips because it can kind of show you when bigger money is stepping in the market, you know, in terms of buying, or when bigger money is stepping out in terms of selling. And this can play a huge role in the shift of the trend or the shift in the direction of the chart. So it basically just measures candles, looks for these candle separations, and based on that, it marks it on your chart and lets you know when there's large amounts of the supply or demand. So basically it works on two different features. We've got these actual fair value gap lines that are projected, which is the usual indicator. There's a lot of other indicators out there that offer this, but I've just combined it with the newest feature, which is the fair value gap trend lines, and which I've never actually seen it before. So it's a very new, which is very custom just to Easy Algo, which is very exciting. So what it's doing is every time a fair value gap, you can see here, we've got a burst of momentum, and then it marks it with the green dot. Whenever we get those green dots on whatever time frame you're on, that is a signal to us now that we can start to look for longs. And that is the start of a round trip, which I'm going to go into some details just now. So when we get a green dot, it's the start of a bullish round trip and the end of a bearish round trip. When we get a red dot, it's the start of a bearish round trip and the end of a bullish round trip. And there's different time frame variations we can use this. I will share with you all the different time frames. I've been testing it in the last few weeks. I've been testing it a lot. So I'm going to share with you my results, and I'm going to share with you all the time frames so that you guys can test it out and see if you can have fun with it as well. So we've got these two features. We've got the fair value gap lines and we've got the fair value gap trend lines. Those are basically the two features. The fair value gap lines are basically just projections of these fair value gaps across the chart, and it will work on any time frame that you're on. Obviously, the higher the time frame, the more solid and reliable these fair value gaps are going to be. If you're on a 1 minute chart, they still will be reliable, but not as reliable than maybe if you're on like a daily or a 4 hour, that kind of thing. So we've got these fair value gap lines, which we can use as targets, fantastic target areas. I mean, in this example, you'll see it taps on here and then it shoots up here. And usually when it gets to these lines, we usually get momentum shifts away from them because it's liquidity. Basically, at the end of the day, it's showing you where there's resting liquidity in the market. And we know that price moves from liquidity to liquidity. So if we can anticipate this movement of price from liquidity to liquidity, then it's very helpful to find a tool that can mark those liquidity ranges on the chart for you. So here we go, another example of how it works with the fair value gap line. So you can see taps on the fair value gaps. Usually when it gets to the fair value gap, we get a reaction off of it. It doesn't work on all of them. Nothing is 100%, but majority of the time it will. And then what happens is it will keep printing the fair value gap line until it gets broken. If price does not close over the line, it will just keep printing and printing, like you can see in this example here. Price tapped into it, but it didn't close over the line. So it kept printing this line, and it will keep that line valid until price closes over it, because price can come back to use that liquidity again and again. I've seen it happen multiple times. And then this is the newest feature, is the fair value gap trend lines, which basically it's just letting you know when we've got this momentum. So another way we could look at it is whenever we get these momentum shifts, some people can say it's engulfing candles, these massive engulfing candles, these displacement candles. It's just showing you a large amount of buying or selling activity suddenly stepping in the market. And that can often be a sign that big money has suddenly arrived in the market, or market maker activity. And then we want to trade alongside the market makers. You want to trade alongside the big money. This is the principle that surrounds the master pattern, which is the indicator X. And the fair value gap imbalance X is actually designed specifically to work with indicator X, but it can work with a trend X and other indicators as well. But it's designed to help you discover when these big money is entering into the markets. So you can see over here, we got the green dot. That would be the sign now to start looking for longs. And that would be the sign that the bullish round trip is starting. So until price goes up, and the way this is designed, the indicator is that it'll keep the bullish trend line going until there's a bearish fair value gap that's spotted. And then it'll keep that bearish until there's a bullish one. So you have the opportunity to ride this wave, and you have the opportunity to keep checking in to see, are we still within the bullish round trip? Because round trips happen in the markets, the market makers, they will move the price from the lowest point they can to the highest they can, from the highest they can to the lowest they can. And this is obviously how they're actually making profit in the market. So this is just another tool to help us anticipate when these market makers are entering in the market, when they're exiting the market, and help us to trade alongside them and trade with them, because that is the key to our continual success as a trader, is to learn to emulate the trading strategy of the market makers, or the big money, the smart money they call them. So through this methodology, it'll just help us be able to more accurately align with how they're trading. So the start and end of round trips, each time we get a dot formed, it'll be the start and the end of a round trip. The start of, when we get the green dot, it'll be the end of a bearish round trip and the start of a bullish round trip. When we get a red dot, it'll be the end of a bullish round trip and the start of a bearish round trip. So these round trips are just letting us know when the volatility is shifting from one side to another. So you'll see over here, this is where we've got the bullish volatility, and this is where we get the bearish volatility. So it's basically, a round trip is just marking out a point where there's a lot of bullish volatility or momentum, and it keeps going until the point that there's a lot of bearish volatility or momentum. It's just marking out those two different stages on the chart when there's bullish and bearish volatility, or influx of supply or influx of demand. So what are these round trips? If you haven't heard about them, I have spoken about them a few times in some of the other indicator X training. So it's basically the start of a cycle. It represents a supply and demand cycle. The start of a demand cycle would be the green dot. The start of a supply cycle would be the red dot. So it's just showing us different cycles in the market, And these cycles are based on this incoming momentum, volatility, or this surge of supply or demand coming into the market. And it just kind of marks it on your charts. You have a good understanding of where that is. The supply and demand cycles. These cycles start from increased supply over demand or demand over supply. They let you know when we've got these increased momentum or volatility happening in the chart. These represent turning points in the amount of supply over demand in the current markets, and these provide us with opportune moments to capitalize on these market maker shifts. So two valuable insights we can receive from these fair value gaps or imbalances is number one, potential exit points, which we use the fair value gap lines, and number two is the entry times, which is the fair value gap dots or the fair value gap trend lines. It can show you when is the best opportunity, when is the time to start looking for longs, when is the time to start looking for shorts. You know, there obviously are going to be other times around this, but this is giving us more confirmation as to when these moments happen. And keep in mind that this is happening on every time frame. So we get higher time frame round trips. If you're looking on the daily or the 12-hour, or if you're down to the 15-minute or the 1 hour, you're going to get lower time frame round trips. Obviously, the higher the time frame, the more you're going to emulate the market maker strategy, because the guys who move the market, they trade on the higher time frames. So when you're on the highest time frame or the higher time frame, you're going to be connecting with the round trips that the market makers are using. But you can use this. It works super well on lower time frames. I've actually been testing it mostly on very low time frames because that's the trading style that I like. And I'm going to show you all the different time frames just now. So higher time frame fair value gaps hold more weight. So if you're going to look for more sustainability, depending on your trading style, you know, if you're a swing trader, you're going to be going to very high time frames. If you're a mini swing trader, you'll go to medium time frames. And if you're a scalper, you'll go into lower time frames. The strategy is based very much similar to the indicator X strategy. You know, we use the higher time frame for our bias, and we use the lower time frame for our entries. And, you know, we observe the higher time frame to get an idea of when the round trip is starting. So for instance, as an example, I'm on the daily chart here, and you can see we got a bullish fair value gap start and a bullish round trip beginning. So from this green line over here would be the sign that we now, you know, we're starting to look for long entries only, because it helps us align with our one-sided bias trading strategy. You know, if you want to only look for longs, this is a great confirmation. When we get these bullish fair value gaps starting, or these green dots, then we're only going to look for longs. When we get the red dots, then we're only going to look for shorts. So this can really help you stay in alignment with the round trip that is currently happening on whatever time frame you're looking to trade. Then if we come onto the lower time frame entries, this was the exact line that was marked out from the daily fair value gap on this. So this line over here was the daily fair value gap line, and I've gone into a 15-minute time frame over here and marked out the same line. And then you can see we've got 15 minutes, little mini round trip starting over here. So once we've got this signal here, this line, it means we're only going to be looking for longs. Then if we come onto our entry time frame, every time we get a green dot confirmed, we look for a long. And I mean, not all of them are going to work. There are definitely going to be a percentage of them won't work, but majority of them will work. And when you use it in combination with indicator X, it becomes an even more solid strategy, because then the ones that don't work, it will kind of move you away from the ones that won't work naturally, just because of how indicator X is structured, which I will go into more detail just now and show you exactly how it works. But I mean, if you look at this example, most of these entries, this would have been a very successful one. This one wouldn't have been as successful. This one wouldn't. So those two wouldn't. This one would have been successful. This one would have. This one would have. So we're looking at like maybe 80% of these would have been very successful, and you're going to get the 20% that aren't. But the great thing about this is that you can set very tight stop losses, so that when you lose, you only lose small, and when you win big, which is based on the strategy that we teach. And I think it's just a good strategy to trade with. You know, when you lose, you always want to lose only a little, and if you win a lot. So the key now is, how do you trade with Imbalance X? And I've already showed you, it's extremely simple to use. You're probably understanding exactly how to use it already. So the bullish round trip, if we're basing our trade on the bullish round trip, what we do is we go into the higher time frame. Whatever higher time frame you are using that's suited to your trading style. If you're going to be a bit more of a higher time frame trader, you're going to use a daily. If you're going to be doing more like mini swings, then maybe you're going to go to a 12-hour or a 4-hour, that kind of thing. So depending on your trading style. But over here, we'll have our higher time frame bias. In this example, we've got the daily. So you can see over here, we've got the daily fair value gap, the daily round trip starting on the bullish side. And then if we go into the lower time frame, which is our entry level, then you can see this line represents the start on the daily. And then every time here, we're looking for our entry. So it's super, super basic. And it's based on the same strategy as indicator X. We've got our higher time frame bias, and we've got our lower time frame looking for entries. For a bearish round trip, it's exactly the opposite. On the higher time frame, we're waiting for a bearish round trip to start. Say on the daily time frame. Once it starts, then we can go on to our lower time frame. We mark out that level, and then every time we're going to look for a short when we get the bearish round trip side on the lower time frame. So in this example, I'm showing you purely how to use this just on its own, but it is a companion tool. So it's an indicator you can use on its own and it will be successful. But if we use it in combination with another one of our main indicators like Trend X or Indicator X, it will definitely hold more weight and it will keep you safer and the confidences will be much, much higher. These are the time frames that I've been testing around a lot the last 2 weeks. And you can play around these, you can find other time frames as well. But I've been working on either a combo of if you've got higher time frames are in the dark color here and the lower time frames are in the light gray. So you can see if we got the daily as our bias, we can look for entries on the 30-minute or the 15 minutes. If we've got the 12-hour as our bias, we can enter on the 15 or the 5. If we've got the 4-hour as our higher time frame bias, we can enter on the 5-minute or the 1-minute. If we've got the 1 hour as our bias, we can enter on the 1 minute. And I've even been testing it on the 15-minute. If you're using the 15-minute as your bias, and I've been entering on the 30-second. This is the one that I've actually found quite a lot of success recently. It's a strategy I like. So I'm just going to share all it down. And what I'm going to do is I'm going to take you onto the chart. I'm actually going to show you examples of all of these time frames and how it would have worked out on all these different time frames. So we can kind of backtest and learn together to see on all these specific time frames. So let me take you onto the chart now and show you exactly what I've been playing around with. I've been mostly testing it out on Popcat. Popcat's a coin that I've just been focusing on trading this coin for the last 2 weeks. It's just been such a fantastic token to trade. I actually haven't even traded anything else. It's been the only thing I've looked at. And it's amazing when you're focusing only on one token or two tokens and you're able to only, focus on a few because it allows your attention to not get too broken up and you end up learning the token so well, how it moves, it's great, really. I've really been loving just focusing on one token. All right, so let us start on the daily. So the first time frame that I was playing around with. So what I'm going to do in this strategy now, I'm going to use the imbalance X for the higher time frame bias, and then I'm going to turn on indicator X for our entries as well. So I'm going to kind of combine them two together, and we're going to see how well they're going to work together in these examples and show you exactly how I'm using it. I mean, I'm still testing it a lot because it's still very new, and the more we test it, the better we'll get. So I think there's lots of room for growth with this. Okay, so let us use it as an example. So if we mark out this level, this is how I like to backtest it. Mark out every time we did get a round trip starting. So these are the areas where we got these bullish round trips starting, and this is the area where we got the bearish round trip starting. I'll just mark this out red, and I'll mark this green. I've been trading from this one of here on the daily. Well, you'll see. I'll show you the different examples. So if we move on to the daily here, our entry time frames are going to be, let's just say the 30-minute or the 15 minutes. I like to use the 15, but you could use any one of those if you wanted. And let's turn on indicator X now. So you can keep it on the lower time frames. I haven't been using the Imbalance X on the lower time frames. I've only been using it on the higher time frames, but it'll work just as well. I mean, if you see in this example, it should work just as well. Just want to make sure the settings are correct on this. Okay, we got 3 and 3. That looks good. Okay, perfect. So if we're on a 15-minute here, we can see from this line over here, this lets us know the bearish round trip is starting. So from this point onwards, it is best for us to only be looking for short trades because we want to align with the momentum, and because we got this happen on a higher time frame, this fair value gap, it's letting us know that from this point it's more confirmed. So I'll just show you on the higher time frame so you can just see how this actually works. What it does is it waits for a confirmation. And this is important to actually know. Let me show you this first. So once we get the green dot forming or the red dot forming, that candle has to close before it gives us a confirmation. So there is a little bit of a waiting sometimes, that we might miss out on the best parts of the journey. But once it's confirmed, then it lets us know on the lower time frame when we want to enter that it's a bit more confirmed in that zone. So like, for instance, if I take you back here, even though the best time, I mean, you can see we could have started shorting from all the way up here, but it only let us know it was confirmed over here. And you'll see as we move on to as we change our higher time frame bias from the daily to like a 12-hour to a 4-hour, we'll be able to get our entries closer and closer. But I just wanted to run you through all of them so we could actually see the difference. So let me turn this off now. So from this point onwards now, we're looking for our short trades. So like we would have missed, if we'd entered here, we would have missed, because you can see the next master pattern only formed over here. So this whole area we would have missed out on. But if we had traded just off the fair value gaps on the entry time frames, we might have caught, we might have entered our short position here or here, and we would have caught that drop down. But if we had just waited specifically for indicator X signals, we would have waited for the master pattern to form. You can see here we've got a contraction zone. Contraction boxes are forming over here. So we wait for this. Once it forms, now we're looking for our short entries when price is above the value line. And then we also use the TDIX, which I will use as a confirmation tool now. So we're always keeping, whenever we're trading with indicator X, we're always using TDIX as well. I love using them all together, but it just adds a nice confirmation now because you can see the fair value gap level that was indicated over here. This is giving us confirmation that there is, in fact, a bearish trend starting, bearish momentum starting. So when we do get our master pattern forming, we know that chances of it going down is very high. So when we're looking for our short entries, when price is above the value line, these become amazing entries. And you can see we've got a very nice drop. Whether we entered this one or this one, we would have still caught a very nice entry. If we look over here, at this point over here, we got a shark fin. So we would have only got a shark fin around this level. We didn't really get a shark fin at this point over here. But I mean, if we go into a lower time frame, we probably will find, if I go to a 5-minute time frame, we probably would have found more entries. But look how perfect it was. Price goes up, drops, goes up. We could have actually caught 2 trades because how many percentage drop was this? This was 20% drop. Wow. So we could have caught that trade, exited at a liquidity line, waited for price to come above it, exited at another liquidity line. You can see our liquidity lines would have been over here. That would have been one of the liquidity lines. This would have been another liquidity line. So we could have entered and exited liquidity, exited at liquidity if we were just doing some scalp trading. This would have been an absolutely fantastic trade to take. And then you can see, once we get big drops, it's not recommended. Whenever there's a big drop down, price, you can't keep shorting it forever. So we go into a higher time frame because you also want to bear in mind that you also want to keep levels in mind. So you can see over here, this was a level, where price was hitting a demand zone. So we also want to keep zones in mind at this point over here. Remember, we would have entered our short position and we would have traded all the way down to this zone. When it tapped into the zone, the likelihood of a bounce happening is very high. So more than likely, we wouldn't have entered again at this point. So let us move on. Then we would have just waited for another round trip to start on the higher time frame. And you can see over here, this is the start of the bullish round trip starting on the daily time frame. So from this point onwards, now we're only looking for long positions when price is underneath the value line. And you can see these would have been our opportune moments. You can see at this point, we got a value line. So these would have been areas we would have looked to enter our longs when we're using it in combination with indicator X. Anytime price is underneath the value line would have been an entry, under the value line, entry, under the value line over here, entry. There would have been some fantastic, I mean, these would have been 1, 2, 3, 4 fantastic trades we could have taken directly after this higher time frame round trip started. 4 fantastic trades over here. I mean, this wasn't too much underneath, but still, it still played out perfectly. You know, as price got under the value line, shut up. So 2 more. And then over here, we had these play out perfectly as well, under the value line, under the value line. And you can see if we use the TDIX, we got a shark fins over here. We got a divergence over here to confirm this area. We got another divergence over here to confirm this area. We got another divergence over here to confirm this area. You can see we got a shark fin in this region. So this was a confirmed shark fin. And then over here, you can see we've also got a divergence. I'll show you here. If you watched my training from last week, I was speaking a lot about divergences. I'm always looking for divergence. It's a very big part of my strategy. So you can see, well, okay, this isn't 100% of divergence, but still kind of going upward, which I like to see, especially from over here. If you look from this point to this point, there's a nice divergence because from here to here, it's kind of a straight line, but then here it's kind of going up. So sometimes divergences can be, you know, not like 100% obvious and they will still work. But either way, we got a nice little shark fin over here. We got a shark fin over here, just a very tiny shark fin. So these would have been fantastic trades. You would have got 1, 2, 3, 4, 5, 6, 7, 8 very nice trades that would have happened over here for you just based on this strategy alone. So this is using the daily as our higher time frame. The daily as a higher time frame and the 15-minute as our entry time frame. Now I want to move it down to not using the daily. We're going to move it to the 12 hour.
We're losing you. You'll keep cutting out.
Oh, you cut it. Okay, just give me a second or two. Can you hear me now? Am I back?
Yeah, now it's clear.
It's clear. Okay, fantastic. Okay, so what I want to do now is I want to take it away and I'll start on a little bit of a lower time frame. So I can just show you the difference. And what I'm going to do is I'm going to focus on the 12 hour now for your higher time frame bias, because every time we go lower in the time frames, you're going to get a better entry for your round trips. So you'll see over here, there's the bullish one and there's the bearish. I'll just pick one bullish and one bearish. And wait, I'll just do this one as well, because I want to show you guys what I discovered. There we go. Okay, so now this is using a 12 hour. So I'm not using the daily anymore. I'm using the 12 hour to identify these round trips. And then I'm going to go down to a 15-minute or a 5-minute for my entries.
Lost you again, Seth.
Seth, you're breaking up. Seth, your sound is breaking up quite badly.
Sorry, guys. I don't know what else I could do. Just let me know if I'm back. Can you hear me now?
Maybe just talk a little bit slower so that we catch every other word and make sense of it. Maybe if it carries on, I don't know.
I'll speak slow. Can you hear me though? Am I coming through?
Yes.
Yes, you are. Okay,
fantastic. Okay. I don't know what is going on over here. Everything's going slow on my side. All right. Okay, perfect. Everything's good now. All right, so I'll slow down a little bit. So you can see over here at this point here was the 12-hour fair value gap, or the start of the 12-hour round trip. Okay. So I'm going to take off the imbalance X just for our entries, because I really have been testing it only just for the higher time frame bias and identifying these best times to start looking for these entries. Over here, I used the 12-hour to identify the round trip. From this point onwards, I'm only going to be looking for short entries when price is above these value lines. And you can see over here, this would have been the perfect place to look for our short entries. As soon as we get this signal triggers, it's so wonderful because it immediately lets you know from this point onwards, I'm only looking for shorts when price is above the value line. So you can see this would have been a fantastic entry over here, absolutely fantastic entry. And we keep going. You can see we get another value line here. This was above the value line, but that was quite a tiny one. And then we got this one slightly over, not the best, but then these were fantastic over here. So you can see from this point onwards, we got such, from the point we were signaled that this imbalance X, our bearish round trip starts, then we're looking for our short entry over here, shorts, shorts, shorts. So these were quite a lot of very nice entries you could have taken. And if we look on indicator TDIX over here, you can see we got a little bit of a shark fin over here to confirm this entry. We got no shark fin over here, so we probably would have avoided that. And we got another shark fin over here, but it wasn't above the value line here. So we would have probably avoided this one and this one because it doesn't match our criteria, and this one here. So this would have been an entry. Oh, but wait. We've got a divergence over here. So this would have confirmed this one over here. So these would have been some very nice and clear entries we could have taken into that downtrend. And here's another good example. So we could have taken, this could have been a potential entry over here. It was a shark fin. And it still worked out. I mean, if you'd entered this trade, it still would have been a 6% trade back to value. And then price shot up again. And then we got a divergence over here, a very nice divergence, actually. You can see prices go up. This would have been an exaggerated divergence because look how high price is going up. Look how low price is going over here. So that would have been an entry. This would have also been an entry over here because we got a nice shark fin over here. So, I mean, even if you just traded this back to the value line, would have been 15%, as a smaller scalp trade. Then we would have waited again, and you can see over here, we got a new master pattern forming. So we always wait for the new master pattern to form because it's letting us know there's a new cycle starting. And then these would have been our short entries again. So you can see, as I'm taking you through the same example, we're getting more and more entries that we could have taken. From this point here, there would have been 1, 2, 3, 4, 5, 6, 7, 8, 9. We could have caught 9 amazing trades, and the wonderful thing that I keep highlighting is that we know from this point, we're only looking for shorts. We're not looking for any longs until we get a bullish round trip starting, which starts over here. So you can see then the bullish round trip starts at this point. So from this point onwards over here, when we get to this line, then we start looking for our longs again. I mean, you can see over here, we missed some amazing trades. We missed this long. But remember, we're not going to catch every single one of them, and we don't have to. As long as we can find confirmed ones, we would have missed all of these, And we could have caught them if you were trading a different strategy, but based on this strategy, we would have waited, and this would have been the one because that would have been confirmed because we got this round trip, this bullish round trip. So at this point over here would have been one of our entries. And you can see over here, it confirms with a nice divergence. The divergence actually happened over here. So that would have been one of our entries catching a divergence. Then we would have waited. Here would have been another. Remember, every time price is underneath this value line is a place where we're going to look for an entry. And then we just confirm these with the TDIX to see. You can see over here was a shark fin. That would have been a nice shark fin. We didn't get a confirmation here, so we wouldn't have taken that one. This one, we got a shark fin, so we would have taken that one. This one over here, we got a divergence, so we would have taken the divergence over here. I would have kept going. Here was another divergence underneath here, so we could have taken this one. And then we got these two would have been fantastic as well. You can see we got divergences, prices under the value line, and this one as well. So when you backtest this, and I urge you to backtest this after this training as well, or whenever you get the time, because it shows us fantastic. You know, this was one of the things that I've been working on for so long, because one of the biggest challenges was, how do you identify accurately when that higher time frame bias has shifted into a bullish environment? And this was one of the keys that will definitely simplify that. So now let's move into a different combination of time frames. So what I just previously did now was a 12-hour and a 15-minute. And now I'm going to look at a 4-hour. I'm going to start at a 4-hour time frame. And I'm going to use the 5-minute for our entries. Just to show you how when we change the time frames, it gives us more opportunities, and just to show you how well it can actually work even when we do change the time frames. So, you know, also with the strategy, when it gets closer to zones, valuable zones, it can also be a good place to look. So for instance, in this example, this was a demand zone here, price tapped into the demand zone, and then we got this round trip, bullish round trip starting signal. So once it taps into a key level and then we get the signal, that can also let us know that this is a good place now that it's going to bounce, or we possibly could get a reversal. But I'll choose these now. So here was a bearish one. I'll include all of them. So you'll see some of them don't play out. Not all of them are going to play out, especially when we go into lower time frames. Like you'll see now that we're going on to these lower time frames, there's going to be a few more examples of, you know, where it will just go up and not follow through. Okay, so yeah, I think that's good for now. So now we've marked out our 4-hour round trip. We've identified them, and now we can go down onto a 5-minute, which is where we would look for our entries. I'll turn on indicator X. So let's start. We can actually just start over here. This is perfect. So from this point onwards, I'm going to turn off the imbalance X now, because I like to use it. It gets too complicated. I mean, you can turn it on when you're looking for entries as well, and it can help you look for entries, because you'll be like, look, that would have been a nice entry. This would have been a nice entry. So you can see it still works very well looking for good entries. But if we had to purely just use it with indicator X, which is what I wanted to show in this example, and there will be more trainings. I will be going over more trainings on how this works as well. So you can see over here from this point, this is our 4-hour round trip that's been notified, our bullish round trip. So from this point onwards, we're actually become bullish. So now we're only looking for longs when price is under the value line. And you can see over here, we've got our value line. So our region of looking for longs is underneath this area. And we can be confident because we got the signal of this round trip happening on the higher time frame. So we always want to identify what is happening within the ecosystem in which we're trading, what is happening on the higher time frame of what is going on. And based on that, it can give us confidence on our entry time frame. So over here, you can see we got a shark fin happening at the bottom, and it was a super shark fin with a green dot. So from this point on, we got a shark fin happening. So this could have been a place we could look for an entry, and then based on what we're receiving over here. And we can also check out on other time frames. You know, like I often look on 2 time frames for my entries, just for extra confirmation. But I'm sure a lot of you guys have also got a strategy that you use to confirm things. So you can see over here, we've got price going down, and over here, we've got price going up. So we have a divergence happening right over here, which is a very good sign as well. Divergences let us know that there's going to be a reversal that's happening. And since we're already bullish, we're just waiting for that reversal point to catch the trade back to the value line. So this would have been one of the very good places to look for an entry. There are other ways to do it as well. If you know some price action as well, you can mark a zone. This is a flip zone over here where price would have flipped here and here. You can see what was previously a resistance became a support. If you watch my price action training, I talk a lot about these flip zones as well. So there are other conferences we can use besides these. You know, you can see we didn't get any of this entry, for instance, we didn't see on the TDIX. This entry we didn't see, and this entry we didn't see. But we would have caught this one, because this one was very clear to us. It was a super shark fin. There was a divergence. So we would have caught that. And I mean, I think this was quite a big trade. It was 16% back to value. Then if we keep going, this would have been another very nice example. Price is under the value line. We've got a nice shark fin on the TDIX. So, and we would have just focused, if you're a scalp trader, like I like to just scalp trade, and I like to take my profits at liquidity lines. So this would have been the liquidity line over here, somewhere around here. Sometimes I even just lower it just to be extra safe. And if we'd entered undervalue here, to the liquidity would still be a 7%. So even if you're getting 5 to 7% move on these trades, it adds up and it becomes quite huge. Here's another one under the value line. We've got a very nice super shark fin happening over here. This would have been a fantastic trade. You can trade back to value, number one, or you can trade to a liquidity line. This would have been a liquidity line over here. This would have been a liquidity line over here. So you can choose, which liquidity line you want to trade back to. It hit all of these liquidity lines. So the first option that you're going to 100% get a good trade is to the value line. That's the safest place. And then the second is going to be targeting liquidity lines. I mean, I haven't even turned on, you could also turn on this area here, this displaying the fair value gap lines, which is part of the indicator as well. And we could also target those if you're looking for exit points. You can see that it works wonders. Here would have been a nice exit point over here. Obviously, I don't want to have too much on the chart because it'll just make it confusing to see. But there you go. So if we could just purely use these as exit points, and they work out great. So we've come over here. You can see now same scenario applies. We're waiting for price to be under the value line. And if we turn on the TDIX, this would have been an area we could have looked here under the value line. We could have caught this short trade, the short long up, and we could have exited at a liquidity line. So remember, we've got liquidity lines, and we've also got these fair value gap lines, which are all based on the same principle of looking for liquidity. Otherwise, look here, price comes down, it's underneath the value line, and then it taps into this zone, this fair value gap waiting over here. So it taps into this fair value gap zone over here. We can look on the TDIX, and you can see we've got a divergence happening. So if price taps into a key level and we get a divergence, and we've got all the parameters, it's under the value line, it's tapping into a key level, a fair value gap level, and we've got a divergence happening on the TDIX. This is showing us a very high probability of price reversing at this point. And remember, we're still on a bullish round trip from this area here. So we know from this point onwards, we're only looking for long positions to confirm that we're still in this trip. And then if you had caught this one, this was a massive move, and you often will catch, some of them will make massive moves. If you had caught this one at that level, if you were a scalper, you might have gotten out for 3%, 12%. But if you were going to swing trade, you would have caught 40% plus on this move. And then we would keep going, and you can see we've got another example here. Price is below the value line. You can see over here we've got very little shark fin, not a super confident one, but still would have been a nice trade back to value. And then price came down again. This is where you might have been taken out of the trade a few times. You can see we've got a divergence over here. If you'd entered, you would have been taken out. But then look, it came back down to our fair value gap line that we looked at. It tapped onto this level. As it tapped onto that level, we got a super shark fin. So this could have been an area to look for. Otherwise, the only thing is here, we didn't have a master pattern. So we could have waited for this point here where we got a master pattern. Here we had a lot of confluences. And remember, the more confluences you can stack in your favor, the more you're going to have a confident trade. So at this point over here, we're waiting for price to get under the value line. This would have been one option. This would have been another option. And you can also see we tapped into this small fair value gap over there, and we tapped into this fair value gap over here. And if we look on the TDIX over here, we got a shark fin. This one, we didn't get a confirmed shark fin, so we might have not taken that one, but this one was a fantastic one because two confluences that happened. We actually got three confluences. So first of all, we're in a bullish round trip. So we know we're only looking to go up. Second confluence is we're underneath the value line. Third confluence is we've got a shark from the TDIX. And fourth confluence is we're actually tapping into a fair value gap zone, which happened over here. So you can see this fair value gap that happened over here was projected, and it became this level, which it respected over here, and it respected over here. So oftentimes these levels will get respected. And when you test it, when you back test it, I've been testing out these fair value gap lines on the lower time frames for my entries, and I've been testing out the fair value gap trend lines on my higher time frames to figure out when these round trips occur. This is just the strategy I've been playing around with, and I'm sure you'll figure out your own ones. So if we keep going, we get another great example over here. You can see we get contraction box starting, we get price under the value line. This becomes one of our entry points. Price under the value line again, and price under the value line, and then price under the value line over here. So you can see we had 4 opportune moments. Now let's look for confidence using the TDIX. So if we look on the TDIX, this one was just a very slight shark fin over here. This one we wouldn't have taken because we didn't get a confirmed shark fin, or this one, but this one would have taken because we had a divergence. You can see price is going down over here, but the oscillator is going up over here, just ever so slightly. So this is one we would have caught. And if we keep going, we got it playing out again. I mean, guys, it's pretty amazing. I've been back testing this and I actually can't even believe the results. And I've been forward testing and actually trading it. And I'll show you the exact trades that I've taken the last few days and how I took them. So here we go. You can see prices under the value line. This becomes one of the entries, another one of the entries. If we confirm it on the TDX, there we go. This was a very nice shark fin we could have taken over here. But then you can see it didn't go all the way. It only went up 4%. If you didn't take profit, it might have come back out to entry and then gone up another 4%, and then you might have been taken out. So even though this could have been a great trade, you could have got in and got out, it didn't even get to the value line, and you possibly would have been taken out. But remember, guys, when I take these trades, if I had taken this trade, I would have had a very small stop loss. Like I would have probably entered on the second or third candle. So I would have entered on the second candle. I would have placed my stop loss just directly underneath. You can see over here. This would have been my setup. I would have placed my stop loss just underneath the swing low. And then my targets, I might have wanted to target the value line. So you can see I'm only risking a 0.59%, which is super low, to possibly make a 4%. If I didn't take my profit, if I wasn't monitoring the chart, because some of you might not, and I didn't notice this reversal candle, because it's a pretty clear reversal candle over here. We got this doji over here. If I didn't notice that doji and I wasn't present to take profits, price would have dropped down again. Okay, let's play this out because it's actually awesome. Price would have dropped down again, and I wouldn't have really taken this one because it didn't really present to me a nice opportunity on the TDIX. I mean, it's kind of a shark fin, but not good enough. So I would have left that out, and then I would have waited for it to come back down here. This would have been another nice shark fin over here. This area over here, you can see it's tapping into an oversold region as well. So I might have been taken out of this trade. So what, I lose 0.059%. Okay, then I look to enter on this trade. Maybe I enter only at this level because you can see the big momentum candle, stop loss 1.7%. Then I can target this value line over here. I've got both. As you can see, I'm in this example, I've got both the master, the origin value lines and the major value lines, because I've been just testing them both with the strategy. But if I had to only turn on the one, like I've been showing you guys, because I just wanted to keep things super simple, it still would have been super effective. You'll see I would have targeted this level over here, or I would have targeted, the liquidity line, which you can see over here. This can be a target because we've got, number one, we've got a fair value gap level here, and we've got a liquidity line happening over here. Remember, the liquidity lines are always at the high of the wicks. So this could have been, so we would have lost sure, on this trade over here, we would have lost a small amount. And then when we caught this trade, we would have made 6%, you know, or even if we'd focused on just this liquidity line over here, we would have still made 4%. So it all adds up. So now I want to show you an example on another time frame. I just want to get through all these time frames so I can give you good examples of how they work. Even if you're going on to lower time frames, it's the results I've been getting on lower time frames have actually been very, very good. So if we go into the 1 hour now, so I'm going to go into the 1 hour and I'm going to look for 1 hour round trips. And you can see we've got quite a lot of round trips happening, okay? But what I want to show you, I want to take this one level further, and I want to show you how the multi-time frame functionality works. And it's been working well on lower time frames. So if I'm on the 1 hour, which is my bias, all I'm going to do is I'm going to come over here into the settings, and where it says time frame chart, I'm going to select the 1 hour time frame. Okay, 1 hour time frame. Then when I go into an entry time frame, whether it's going to be a 5 minute or a 1 minute, it's going to still project the 1 hour round trip fair value gap trend line. So I can still monitor this trend line and I can look for my entries within my lower time frame still. So look here, if I go into the 1 minute, say I want to enter on the 1 minute over here. But I'm keeping, so you can see this line over here is the fair value gap trend line, which is based on the 1 hour. Because remember, I'm using the multi-time frame functionality. So this is the 1 hour happening here, which is great because when I'm using it, when I leave it on, it helps give me a barometer of what I'm looking for. So from this point onwards over here, I know I'm only looking for shorts. I'm only looking for shorts because I'm underneath this round trip, this bearish round trip. You can see from this point over here, it started. Can you see this is where we got the red dot? Right over here, we got this red dot start. I'll just highlight it to make it easier to see. I've been testing this so much, guys. I've been having so much fun. So from this point over here, we've got the red dots. So we know from this point onwards, we're only looking for shorts. So I would have looked for a short over here. I would have looked for a short over here, and I would have caught this nice move. If I'd opened up the TDIX for confirmation, you can see we got a very nice divergence over here. Got a divergence, so we would have caught this very nice move down. And over here, remember, I can keep checking it. We're still underneath it, it's still red. So these would have been 2 more fantastic trades we could have taken. Let's confirm it over here. Oh, you can see over here, we got a divergence. So this would have been a good entry. And this one over here, we got a nice shark fin. So both of these would have been fantastic entries and we could have caught this drop. However, over here, we wouldn't have been able to keep going because you can see price went over and it just blew up. So we might have just stopped there and waited. But then you can see over here, guys, we still got the same thing playing out. You know, it's not going to work for every single example, but you can see if we follow this line, remember, this is the 1 hour line that's showing us the round trips. So as long as we've got this, we're looking for shorts. You know, we can look for shorts here. We can look for shorts there. We can look for shorts here. All of these would have been shorts because it's adhering to our higher time frame bias. And in this example, I'm only using the 1 hour as the higher time frame and my 1 minute for entries. Just I wanted to give you guys a lot of variation with these examples of how we can trade on the 12 hour, the 30 minute for entries, or the 4 hour for our higher time frame and 5 minute for entries, and now 1 hour for the higher time frame bias and 1 minute for our entries. So you can see all of these would have ended up being fantastic trades. You can see over here, we got a double shark fin. That would have been a good entry. This wouldn't have been an entry, would have skipped this one because it doesn't confirm. This would have been a very good entry. We got a shark fin over here, so we would have caught this one. If we move over here, we've got a divergence happening over here. See price is going up and the oscillator is going down. So this could have been one we could have caught. This one over here, we've got a nice tiny little shark fin, but it is a shark fin there. And this one we would have left out. We still would have caught fantastic trades, guys. And these are, if we just traded back to value line, 1%. If we went to liquidity, 3%. So if you're still making 1 to 3% per trade, it still adds up very nicely, depending like I said, this strategy can be applied to suit whatever trading style you have. You're going to be swing trading, mini swing trading, scalping. It's going to work for you either way. So now I want to take this one step further and show you exactly how I was trading the last week. When you get a new indicator, I like to test a whole range of capabilities. So what I did was I set this to a 15-minute chart over here, because I wanted to see, and I was actually getting really good results on the 15-minute and the 30-second chart for my entries. Remember, you must just trade according to your trading style and find out what you like. I like to trade on lower time frames, and I just wanted to show you how well this works on all these different time frames. So for instance, over here, if I just pick a random place, every time we're going to get a green dot, we're going to look for longs. Every time we're going to get a red dot, we're going to look for shorts. So you can see I got the green dot here, so I'm looking for longs. I got a green dot here looking for longs. So these would have been areas I was looking for longs underneath the value lines, even on a very low time frame. Remember, what I love about the strategy, it's the same strategy. It's just applied to different time frames. Completely the same strategy. These would have been areas of entry. These would have been areas of entry. If we keep going over here, you can see we got a green dot over here. So here we go. This would have been a fantastic entry. Look at that. Look at that. So we get the green dot. We wait for a master pattern to form over here. We wait for price to be under the value lines. We got a very nice shark fin over there. This would have been a fantastic entry. Then over here, you can see the difference with this. If we're moving this, because remember, this is on a 15-minute now, we're going to get a little bit more chops, like, it's choppy. So it'll go from over here. You can see we got a green dot. So then we're only looking for longs. We're looking for longs. All of these would have been a long, actually. That would have been a long entry. Because remember, we're under the value line, long entry, long entry, long entry. And remember, if you're trading on this time frame, you're doing just small little scalps. And then it would have exited over here. I mean, the round trip would have ended on this time frame, and then we would have looked for shorts. We might have caught a little short over here. I'm just showing you guys the versatility of how this works. You might not want to trade on this time frame, but then look, it shifted again. So it's more choppy on the lower time frame. So it definitely requires a little bit more skill, and you could probably combine it with like an EMA or something like this. I mean, this was fantastic over here. You can see we got a bearish round trip happening over here. And then all of these would have been short. This would have been a short. This would have been a short. This would have been a short. Because we're still underneath. We're still underneath this round trip area. So these were 4 shorts we could have caught underneath here. But yeah, guys, so this is my testing I've done. I'm definitely going to post more training and give more examples. I want to open the floor now to questions, because I'm sure a lot of you guys have questions, and I want to answer all of them. Let me set this back.
Emir, I think your hand is up first, I think.
Yeah. Seth, thanks a lot. Great stuff. You're just too fast for my 60-year-old brain. I'd like to ask you about the imbalance X indicator setup.
Yes.
What are the settings for that? And then on top of that, you have a fair value gap indicator. Is that something from Lux Easy Algo, or is it from the this one? Is that I couldn't find that in the
It's
Easy
part of the
Algo.
same indicator. So I've got 2 different features within this indicator. The one feature is going to be these fair value gap lines over
Right.
here. And then the other feature is going to be the fair value gap trend lines. So
Right.
it contains both of them, and you can select both of them at the same time, or you can just select the one over the other, depending on
Okay.
how you like it to be.
I mean, you've done the back test. Which one would you prefer us to start off with? Till
Well,
we
they
get
both have different functions.
okay.
This one over here, the trend line is helping us find entries, whereas the fair value gap lines are helping us find exits. So the one is
Right.
good for entries, and the other one is good for exits.
And do we have it on the chart setting, or on you said something about a 1 hour thing. I got
Yeah.
confused.
For now, you can keep it on the charts, on the chart settings. The
Right.
multi time frame function is just if for instance, so say for instance I'm on a 4 hour over here, and you can see over here we've got round trip starting here. All of these dots are round trips. So then what I would do is I can go over to the settings, and I can set this onto a 4 hour over here. And now it will stay the same even if I go into my entry time frame. So say I go into my 5-minute time frame, it's going to still show me the round trip from the 4 hour time frame. So it just gives me, it just helps act as a guide. So you'll see from this point over here, you know, instead of me having to go back and check, I can know from the point I got this green dot, I'm only looking for long entries. And you can see we would have got a nice long entry over here. There would have been a few long entries. So it's kind of like an EMA to guide you, but the multi-time frame function allows you to see the higher time frame while you're on the lower time frame.
Thank you. Thank you.
Does that make
Yes.
sense? I want to
Yeah,
make it
does.
super clear.
I have to work with it. Then I have to play with it. Then it'll make even more sense.
Okay, perfect. Yeah,
Thank you.
you can always come with more questions after that.
Tobias, it's you, I think, and then I'll got a couple of questions.
Hey Tess, good to hear you, man.
Hey, good to see you too, my friend. Or hear you.
Yes, I try to make it fast. It's so hot in Germany, man. Ridiculous. 30 degrees today, man. I'm sweating like hell.
Wow, that's crazy.
Now it's really hot, so I just want to jump to the pool. I have 2 or 3 questions, but short ones actually. Well, let's see.
Yes.
I mean, you know my strategy, right? I was on the 30 seconds the last week, and I really made amazing. It was really good. I made like 10% through little scalps. It was ridiculous. It was really good. So now you bring this new indicator, and of course it makes a new mess in my head. But I just have to ask, because what the? Yeah, can you hear me?
Yeah, I can hear you now. Say that again.
So you told me to use the 1 hour time frame for this 30-second entries with the Haikanashi, right?
Yes.
And I saw this is sometimes a bit, because you know, then you go lower and you see it's already changing on 30 minutes or 15 minutes and it's going back, right? So today you told me to look at this daily VWAP, right? And I saw it looked actually very good. I have to say.
Yes.
So if you are under, I'm pretty sure it's for shorting, and if you are up, it's for longing, right?
Yes, 100%.
So the question is now on this time frame, on this low time frame, you know, and now you explained me. I bring all questions together to one. You explained that you take 50 minutes with the new imbalance, and you skip fully this 1 hour high time frame. So I'm now a bit not confused, but I'm thinking, okay, should I leave this 1 hour? Should I take this? Should I take the daily VWAP?
I see. Yeah, I understand. Yeah, there's so many different tools. I mean, it's all up to you. You know, it's all just back testing and see what works for you. This indicator is very, very good. I think if you use it in combination, it can just be an extra. Like for instance, if I added the let me put the daily VWAP on here as well.
It is what I wanted to ask, right?
So you can see. Yeah, you can see they work well together, because at this point over here, see at this point where I'm just going to make this red. We've got both of them coinciding. So this is the 1 hour that I've selected over here. You can see I've got the 1 hour fair value gap here. And then we're underneath the VWAP, the daily VWAP as well. So from this point here, we can be 100% confirmed we're very bearish. So all of these...
But why you took the 1 hour? Because you said you take 15 minutes for this 30 seconds entry.
No, you can take either one. It's up to you. It's really, I'm just giving... this week I tested on all of them. I tested on all the ones I showed you. I tested on, and they all gave very good results. So I just wanted to share all the varieties, so those, you know, who like the trades, bigger trades, swings, scalps, it suits everyone.
Yeah, so I think, you know, the only thing I was really struggling still last week, it was the Haikanashi. It's always, I mean, would you suggest to go also on 50 mini Haikanashi? But then it's so choppy. You don't get clear flat the candles anymore. You don't know. You can just see the trend. If you're on a 1 hour, you can say, okay, I look on 30, 15. It's already changing. And then you can make a decision. Sounds this good?
You know what's the last 2 weeks that I've been testing this, I didn't actually even look at the Haikanashi once.
Mm-hmm.
I was testing it purely off of the imbalances, and my results were very good. They were very, very good without even having to look at it. So sometimes looking at less can be more, you know.
Yeah, this is the thing, Seth, because you know you add more and more and more, and then you get this brain fog, and you're done, and you make wrong decisions. So this is the thing. When it's hot like this here, and then you see nothing anymore. I know this. I had this many times. I know when this point comes, you have to put the indicator away and you have to stop. These are the most two important things.
Yeah, that's a good point. It's important to know when you should stop trading as well.
Yeah. So yeah, I mean, I would be happy to skip this Haikanashi because you think if I start with this now and I take the daily VWAP and this one, this would actually be enough, right? If I take 15 minutes, for example.
Definitely. I would say if you pick between the two, this would be a better one to pick. I would 100% say that.
I see. Okay. Well, thank you so much. I think this is for now all, Seth. And thank you for all your support. Really. Thank you so much.
Absolute pleasure, my friend. Yeah, test it out and let me know what you think of it. I think you're going to get good results.
Yes, man. I tell you, I mean, I was on this 30 seconds last week and I made it was ridiculous. I have to say, really. I mean, I also did Popcat and I did Boom, I don't know. So both were very good, but Popcat was really amazing. Really, it was. I could just go ahead and I was like, oh yeah, and I like this 30 seconds because you get so much entries in a short time, and 1%, 2%, it's enough. You do 3, 4 a day, and you go in the pool.
It's amazing. It's amazing. I'm so glad you're finally finding your groove with it, man. It makes me so happy.
Yeah, it makes me happy too, man. You know, we're now talking for weeks and it's going really good. Thank you very much. I'm still waiting for a private thing, but yeah, when you have time, let me know. And thank you very much.
We will definitely get there. I'll definitely do open up for that in the future, definitely. Yeah. I'll let you know.
Thanks.
Cool, man. Cool.
Well, have a good time.
Enjoy the pool.
Yes, thank you. Bye.
Cheers.
Hi, Seth. Hi, that was great questions, Tobias. Glad you're making headway with this stuff. As many of you guys are, actually. We had some really good feedback in the chat for you, Seth, for this presentation. People, including me, are really excited about using it. And a lot of people have said, really, thank you for all your, Jacob said, thank you for all your time and hard work. And I think we probably all echo that. The very few people are as committed to their membership as you are. So thank you for that.
It's a pleasure, man. I absolutely love it.
Yeah, no, it shows you love it, and you know the community love that passion in you. So that's brilliant. I've got a couple of sort of notes really. One was one of the things you were showing was that you know you're finding new shorts along the way down. It's trending down quite heavily.
Yes,
and you were finding new opportunities with indicator X to take on new shorts. Now that is probably quite a good thing when you get into a trending market, that you can find opportunities to get in, because sometimes you feel you've missed it.
Yes.
And there are no you don't get an entry and you just feel the FOMO. Would you say that is you know, a fair reflection of this thing? It may help people get in if everything lines up. Would you say that's fair?
Definitely, 100%. It'll give people more opportunities. I'm 100% sure that it will, because it'll give you more confirmation when you're in a confirmed downtrend, which means you can just look for say shorts, and you'll get lots more opportunities to catch shorts.
Yeah, that was my reflection when I looked at it. I thought, you know, there's a short there. Yeah. Thinking normally once it's gone, you think, oh, it's gone. I missed that. And let's go for something. Let's look for something else. So that's brilliant to hear. The other thing is some people are quite keen on getting to the recording. I said maybe tomorrow morning. I don't know. With your internet, maybe tomorrow morning is a realistic expectation. Is that fair?
No, what I'll do is I'll upload it straight away, and sometimes it'll take maybe an hour or two, but I'm pretty sure 2 hours after this ends, it'll be available. I'm pretty sure.
So Kwame, if you're specifically looking for the replay, a couple of hours after we finish here, keep an eye out.
I want to get it out quite soon because I know that people want to see it today.
They're hungry for it. They're hungry for it.
Yeah.
So
No, I will. I'll make a point of it. Make it happen.
Right. And then will there be a PDF for this? Toby's asking.
Yes. I've created the PDF I have here. I will attach to the recording, and I'll continue. I'm going to complete it. I'm still got a lot more to do to it, which I'll finish in the next couple of days.
Great. Can you show that slide where you compared high time frame to low time frames? Got a question here. Which time frame would work for a low time frame, 5 minutes? Which is the higher time frame? You did a little slide where there you go.
This one here,
are these like high time frame, low time frame equipment? I don't think they are they?
Yes. The black is the higher time frame for your buyers, and then the grays are the entries.
Okay, so whoever's there, take a screenshot. I've already taken my screenshot of this, so I can get started. Somebody's talking about how to get access, and I think somebody's directed them to get into WAP and reclaim the asset.
Yes. All you have to do is go into the WAP and put in your TradingView username like you did in the beginning to reclaim, and then it should add it to your chart immediately. You can go into TradingView, look in the invite only scripts. If it's not there, refresh the page, and then it should definitely be there, and you should have access.
So Rajiv and others, hopefully that answers your question. I'm just scrolling through. If I've missed your question, please type it in again. Some people said it was lagging. The recording will be fine. So in a couple of hours,
yes, that's right.
The recording, and you'll get perfect sound and perfect video accompaniment. So that's fine.
Slow down the video. Is that possible?
If you, I don't think you can slow it down on YouTube. If it's on YouTube, you can using the settings. If you go to YouTube settings and then
I just get so excited.
If you go to settings and go to playback speed, and you can go from 1 up to 2 and more, and then from 1 down to 0.2. I've tried Seth on lower, and when you get too low, it really sounds strange, Seth. You sound really strange, low settings.
So, hey Seth, actually, just want to know any special settings required for Imbalance X, because I just claimed the indicator right now. Just wanted to try.
Sorry, can you say that again? I missed the question.
Is there any special settings required which you are using for Imbalance? Okay.
No, there's no settings at all because it's just price action. So you just turn it on and that's it. There's no settings required.
Okay, perfect. Thank you.
Awesome. Any other questions?
Hi, Seth. Sorry, Amir.
Go.
Just one question just to clarify. So when you're doing, say, the higher time frame 12-hour and the lower term, say the 15 minutes, do you on this imbalance settings change it to the 12-hour on the 15 minutes, say, so you can actually see that green dot?
Yes, exactly.
Right,
so you can come in here, you can set it to the 12-hour, and then if I go down to the 15-minute, it'll still be projecting the 12-hour. You can see it's still based on the 12-hour now. And then if I turn on indicator X, you can see, look at all the amazing entries I would have got here. It's really great. I mean, for all of these down here are going to be shorts.
No, super. Thank you.
Pleasure.
Yes, Seth, what I was going to ask is I've got Imbalance X on my chart on the 15-minute.
Yes.
And the red lines and the green lines, they go through the candles. Is that normal?
Yes, they go through because let me go into the 15-minute to show you. They go through at the fair value gaps.
Right. Oh yeah. Okay,
So,
gotcha.
so wherever it goes through, that's where fair value gap is happening on the chart.
Okay, cheers, mate.
Cool.
Seth, a couple of people are having trouble still. I think maybe if we refer them to the after party and they can take it up with the team, maybe Power and other people can help them get access. And if you want to take it from there, or
yeah, what I'll do is I'll make a post in the announcements, just a quick post quick instructions on how to add it. I'll make a little short.
They've tried following what we said earlier, but they're not good. They're having still trouble. So maybe they're still having trouble, having tried claiming it from WAP. Somebody saying their WAP account is I always find that a really weird word to use. Their WAP account is locked or something. How do they unlock it? And others. So anyway, maybe that's a longer thing for this call, I think.
I mean, Power Friend is probably the best person to speak to. He knows that stuff super well.
He does, yeah.
If the way I explain is not working, then I'm not 100% sure, because that's the only way I know. But it should 100% work. Otherwise, they might have to chat to WAP support. But you should just go reclaim it and then go into TradingView, and it should be there on a refresh.
It's worked for some people, Seth. So I'm sure it works. But maybe some people have got issues with their account or something. I don't know. But
I have the same problem. I mean, once you go to WAP, it sort of sends you right.
They need to also refresh their TradingView after claiming the.
Yes, exactly.
The imbalance. They have to refresh their TradingView.
No, what I think where people are struggling is when you go into your WAP and you see your badge or whatever picture you've got. So if it's your face, or like I've got Liverpool badge. If you click on that, it'll say Hub HUB. If you click on that, then it brings down all your stuff that you've got installed, and you'll see the big icon of Easy Algo. If you click on that, then it'll bring down everything to install onto your TradingView.
Amazing, Paul. Thank you for that. I'm sure that'll help some people.
And go straight into TradingView and you'll just claim it.
Hopefully that helps all you guys. Please, if you're still stuck, then just tag Power Friend, and maybe he'll be able to help with anyone.
Yeah, and I'll put a short instructional after this into the announcements just to help people further.
Thanks, Seth. I think we're out of everyone's so amazed.
Hello, Seth. I have a quick question.
I got a quick question about the event details. It looks like it has changed to 5 p.m. from 1:30.
Sorry, what is that? Which event are you talking about?
I mean, yesterday when I checked, it says there's going to be a meeting around 1:30 p.m.
Okay.
in the afternoon, and now when I checked, it was 5 p.m. Look like it has changed. Or
what time zone are you in, Tunde?
I mean, Stockholm time zone, same as South Africa.
It hasn't changed to my understanding. I don't know if you changed any settings. I don't think it's changed. I don't know what happened today, but I don't think it's changed. But I'm sorry.
No, nothing was changed. It's always set to this time every single Monday.
I would just recommend all of you just please put a note in your calendar, get the alert 10 minutes before, 20 minutes before, and you will find it then in events. Sometimes it's put in events, the same day or later on in the day. So just rely on your calendar to bring you here. And you will be on time.
I didn't get any alerts today. That was kind of strange. I already show interest. That's why I came late.
It's always 4 o'clock UK time, 5 o'clock South African time. Tunde, I'm so sorry that you had a problem. Really, I don't know. Everyone else maybe didn't have the same problem. So just have a check on your settings on events or something on Easy Algo. See if you're getting alerts. If you've set it to get alerts to your phone at the relevant time. Sorry, I don't know what else to tell you, because like if lots of us are here and we saw the same things. So really sorry, Tunde. I don't know how we can help any further on that one for now.
The recording will be out as quick as I can after this for you to watch it as well.
Quick one, Seth. Thanks for this presentation again. Lovely one. What candlestick will you recommend? Do we use Ikinashi or the normal candle for Imbalance X?
I've just been testing on the normal candles, but you can use both if you want. You can test it. I haven't even tested on. I mean, it would probably work very well with the Heiken Ashis actually, because then you've got two different confluences. You've got the actual candles, and you've got the imbalances. So it could work very well.
Okay. Seth, does that mean that on Heiken Archie, which changes all the other settings, when you try to take trades off that, does that mean your settings for imbalance X is not corrupted by Heiken Archie candles? Or you're using
the specific Heiken Archie that you get with Easy Algo, the Heiken Archie X, it's designed to not corrupt anything else. It's an overlay, so it's not actually.
But you can't use it for entries. Seth, can you use that for entries, this one? Or is it just for bias?
Yeah, I think it's best for bias always, because the only thing is you can't see entry candles. You know, with Heiken Archie, you can't actually read that. That's only good for the trend. You can't really see specific candles. So I say just use it for the higher time frame, and then use the normal Japanese candles for entries.
For entries.
Tunde, I hope that, because we never ever use Heiken Archie for entries from the trainings that I attended. So I just wanted to make sure you were okay with that.
That's correct, Gordon. Yeah. Thank you.
Thank you, Tunde. Thank you. Seth, I just want to, before you close off, I just want to say, give a shout out. Some of us have just been on Promod's 3-day intensive.
Yes.
Wow.
Really, was it good?
Wow. It was a little bit incredible. So a bit like your trainings, just imagine his normal trainings times 10. It was a bit like that. So
I'm so happy to hear.
If he ever runs it again, please join the queue fast. That's all I can suggest.
Thanks for that. I'm really happy to hear that.
No, I think he got massive, amazing feedback. Yeah, definitely.
I'm going to message him after this.
Yeah, I think he'd be glad to hear that he was appreciated publicly.
All right. Any more questions, guys? No more questions, or you want to just go play with the new tool now?
Let's go play. A new toy in the pram.
May you win lots of trades, guys. Let's make some money. Let's get rich.
Seth, go well. You've done amazingly. Well done.
Thank you.
Awesome, guys.
The wait.
Yeah.
It's worth the wait.
Yeah, it's worth the wait, and it's gonna get better. This is the first version, and I'm already working on some changes and stuff. So we're always making things better, guys. It's always.
Thank you.
Cool, guys. Well, have a fantastic evening. Remember, if you want to continue this in the live chat section in the group, please, by all means, hop in there, chat, and we'll definitely be back with another training soon. Keep well. Happy trading, everyone.
Do.
Cheers, Seth.
Cheers for now. Bye.